And we are live. Hello, hello, and welcome to our Lunch and Learn. I'm Maggie Nielsen from Purse Strings, and all month at Purse Strings here, we're talking about different types of investing. So we are on the last day of the month, our last talk about investing. So we've done, ESG, we've done real estate, we've done cryptocurrency. So really getting in all these different items. So today we're going to be talking about alternative investing, which I'm really excited to learn more about. Kelly actually introduced me to kind of alternative investing. So I'm excited to learn more with all of you. As you know, Purse Strings is here to provide financial education, some tips and tricks, and then when you need a professional to put things in transition or transaction, we have top tier financial professionals willing, ready, and able to serve you. So today we have Kelly on. Kelly, we're so excited to have you.
Thanks for having me. This is my first live event on Facebook and LinkedIn.
You're doing great so far. You're doing great.
Great.
Would you give a little introduction of yourself to our audience?
Sure. So I'm Kellyanne Winget. I'm a fifth generation oil and gas family. I've been in the alternative investment space for about 12 years. A few years ago, I launched Alternative Wealth Partners, which is a private equity company that's focused on making alternative assets accessible and understandable for the retail investor. Typically, when you think of private equity, you think family office and institutional, but that's not necessarily true. When you achieve $1 million net worth, or even if you're a high income earner, you have access to the same investment opportunities as like Warren Buffett. So our job is to make that understandable and accessible. So here we are today.
I love it because we talk about, just investing, and so many times we just think of, the S&P 500, and we've been talking about, there's just doesn't even have to be stocks. It can be homes. It could be all these different things. So this is definitely another resource I'm excited to talk about. So what kind of is alternative investing if we're to really break it down?
So the broad definition is basically everything that isn't stocks or bonds or just cash, right? So when you invest in a multifamily, or if you buy a second home, this is technically a alternative investment. And it can get even crazier when we get into like the tech startup space, or maybe cannabis, or what's really wild right now is cryptocurrency. Cryptocurrency is definitely an alternative investment. The way that we participate in alternatives is really across the board, everything from oil and gas to crypto and cannabis. So.
Wow. And so, those are definitely, not the typical things people are throwing their money at. And so what are kind of like, the pros and cons of this different route, just versus the stock market?
Sure. So when you buy a stock, you're kind of like the last person in the food chain to get paid or make money when it comes to the business's success. And the way that private equity works, and the way that we invest in assets, is that we're at the very front of that line. So we remove all of the middlemen, we go directly to the asset, and we own right at the front end. So like, let's take energy stocks, for example. If you own an Exxon stock, you're getting maybe a dividend. That dividend is literally the net profit that's getting paid out to you. And the way that we invest in oil and gas, we're literally at the ground or below. So the first check that's paid off of that well goes to us, and then everybody else gets paid. And so that's where we like to be, because we make the most money.
Yeah, it's definitely not as much as a trickle down effect where everyone, pulls their hand in and then you get whatever's left in the pot.
Right.
It's, you're at the top, which is, definitely a way to have more money.
Right.
Are there any like cons about this, alternative investing?
Yes. So there's a lot of risk. You have a heightened risk, right? So when you invest in a stock, your risk is kind of just like, what is the overall success of that business? And when we're invested, we're in like pre-IPO. So we're still a privately owned company. There's a lot of things that can happen with that company before it eventually decides to go public, and it has an influx of that capital to keep it going. So you deal with kind of their relative risks. So if you're, and I'll talk about oil and gas just because that's what my background is.
Yeah, please.
So in the oil and gas space, when you're invested in a stock, like that's a very well-established company, the risk might be geopolitical. So when the prices are volatile, you'll see that. But if you're invested at the wellhead, you have a lot more risk involved. You have like, is there mechanical issues? Do you have the right people on the field? Is it a dry hole? There's all of these things that can happen that increase your risk when you're invested at the front end. You obviously get the benefit of that through tax benefits if there is problems, but the ultimate goal is to make money, not to just have a
Right.
but each kind of asset has their own set of risks, and when you're on the private side, you aren't as protected as you are on the public side.
That makes a lot of sense. I mean, part of it is, you risk big, but then you could win big or you can lose big. And that's all how it goes. And we talk with a lot of our professionals who do like a risk tolerance assessment, even when they're just investing in stocks, to know like how risky is it for you? How much can you take? How much, do you need today versus in 20 years? So I know there's many moving parts than just being able to mentally tolerate the risk.
Right. And most people, aren't 100% in alternatives.
Hmm.
You need the diversification just to protect, yourself and your wealth. Most people, individuals anyway, have somewhere between 10 and 20% of their net worth in alternatives. And that just depends on where you are in your investment journey. Obviously, if you're older, you're not going to be taking as many risks as you are if you're, 30 or 40 years old. When you're still in those income making years, you can take more risk and maybe add more alternatives to your portfolio. We're in a really interesting time now just because the stock market is going crazy.
Yeah.
And people are trying to figure out like, okay, well, this has been a really safe bet for 15 years. Now what? And it's going to be an interesting thing to watch, because the people that were 40 years old in 2008 when the market took a huge turn,
Yeah.
are now 60, 70 and can't wait another 15 years to experience that growth again. So,
Right.
some people are having to be more aggressive with their portfolio now, even if they are older. And, it's kind of a really great time to be in alternatives right now because the market is experiencing this. And alternatives usually are non-correlated. So the market can kind of do whatever it wants, and our assets will just kind of do what they're supposed to do.
And I feel like that's part of it is because we get the ripple effect with these stocks where this is very at the front of everything. But as we know, stock market has been crazy, gas prices going up. We still, have a war going on. How has that kind of affected what you do and with the alternative investments?
So I'm a little unique as far as like the private equity space goes, because I pay attention to all of this, and the way that we're invested, I really like commodities. Okay, so we're in what's called a commodities super cycle. So we're seeing these huge increases in the price of commodities. So we've invested in infrastructure,
Mhm.
manufacturing, and commodities, 2 years ago in 2020, when everybody
Yep.
was like, that's the worst thing you could be investing in. Even in this, I don't own a lot of stocks. I in April of 2020, when oil went to -40, I bought a lot of Occidental at $11. So,
Wow.
my Occidental stock is up 300%. But these are things that I pay attention to. And so that's why we have access to these types of deals. Basically, the world imploding right now is the best thing that could happen to the things that we're invested in, which is, when you're in this type of position, you have to do these things on behalf of
Right.
your investors. That my job is to make them money. And to make them money, we have to invest in energy and manufacturing and, certain types of real estate that
Right.
help, prop up the part of their portfolio that is not necessarily doing well now.
Right. Exactly. And so, what you do is a little different versus some like financial professionals who have their CFP and different regulations. Can you explain how working with you is a little bit different?
Sure. So I partner with people's financial professionals. Typically, they have a CPA, a financial advisor, maybe a financial planner, a wealth advisor, estate planner. These people that are involved in their life, working on their portfolio. I'm I'm a fund manager, so my fiduciary duty is to my fund. Uh,
Hmm.
so all the decisions I make are on behalf of the investors that are invested directly with me. Um, we have it's a 506, it's a Reg D offering, so it's a private placement. Most financial advisors, if they're under a big firm, don't have access to these types of deals. These are definitely what you consider off market private offerings, and that's what I manage. So I work with a
Okay.
lot of CPAs because there are tax advantages involved in investing in the private space. So I don't shy away from talking to people's financial advisors like some fund managers do, but
Right.
it's definitely a partnership because we all really care about what's happening to your money.
Which is one of my favorite things to always highlight is it is a team and everyone needs to be working together. Introduce your professionals, have them have the conversation so it is a holistic plan, because we know what projects are like when everyone goes a different direction
Yeah,
and it's your money and we don't really want to mess up that project,
right.
as much as we don't have to. And so if someone wanted to work with you, what would that process kind of look like? Should they talk to, their financial advisor and then to you, reach out to you? What's the best way?
I really like to have a conversation with everyone that I partner with, just because it is a very intimate decision when it comes to
Hmm.
the private investing space. It's a two-way street. I have to like you, you have to like me.
Right.
And then we start to get those financial professionals involved because, I don't want to waste anybody's time if it's something that they just can't have in their portfolio. Uh,
Right.
so it starts with an introduction call with myself directly, and then we'll take it from there based on that conversation.
And do you have a minimum people need to start investing with you? Can you
Yes,
share that?
yes. So our minimums are $100,000. We only work with accredited investors. That means you
Awesome.
have $1 million net worth, or you have an income over $200,000 a year. I will talk to non-accredited investors, just if they want some more information about alternatives and
Yeah.
where they can get started as a non-accredited investor, because my goal is to make sure that everyone has access to this information because it's not talked about.
Hmm.
And the ultimate goal is to get to that accreditation status uh,
Right.
as a business owner, or even as a W 2. Um, and I want to help everyone understand how to get to this place because it is about generational wealth, and
Yeah.
it's there for your taking. And, what are the steps to do that?
Yeah. We all got to be part of the game and get in
Yeah,
there and play a little bit, And I love, yeah, generational wealth is so important. It's not just for you, but this is long-term investments.
right,
So again, not quick get rich schemes, but long-term investments for you and the generations to come.
right.
I feel like we've already answered a lot of great questions. Do you have any other, information that you'd like our audience to kind of know about?
Um, Make the time to educate yourself about these opportunities because, um, as you can see now, the typical plan A, plan B, plan C in the market is not working.
Yeah.
Uh, we're entering a whole new time, and there's going to be the largest transfer of wealth in the next 5 years,
Yeah.
from the baby boomers to the Gen X and millennials. Um, and we just need to make sure that you're making smart money decisions. And if you aren't working with a financial professional yet, whether it's a CPA, an advisor, a planner, anybody, that you should start your research now, and shop around. Don't just pick the first person you come across because their website looks good. Interview and find out if you guys have matching mindsets,
Hmm.
that your goals are all aligned.
I love that. And yeah, part of purse strings, we always say we have these vetted professionals, but one might click better with you. Talk to two or three. You might bond over a college or a sport or something else where you feel really aligned, and that's your person. There are many great people out there, but you just want to feel, really comfort because they're managing your money for generations to come. So you want to make sure, you pick someone who really resonates with you.
Right.
Well, I appreciate all this knowledge today and just knowing that you can invest in these other items, not on the stock market. There's more options out there and we have to be talking about them because we are all going to be passing down generational wealth.
Yes.
So you can always reach Kelly at kwinget@alternativewealthpartners.com. Or just alternativewealthpartners.com. You can check her out there. She's also one of our Purse Strings approved professionals. So you can check her out on our site, pursestrings.co. And yeah, reach out to Kelly or Purse Strings if you have any questions. We'd love to continue the conversation and get everyone investing. So thank you.
Thank you. Have a great 4th of July.
Oh, yeah. Bye-bye.
Bye.